LHDN is giving Malaysian businesses a 6-month interim relaxation period to help ease the transition into e-invoicing. In this video, I'll explain exactly what it means, who qualifies, and how you should handle your invoices during this period. So, under LHDN's E-Invoice rollout, every business gets a 6-month interim relaxation period, and this depends on when your phase starts. What does that mean? Well, during these 6 months, you don't have to issue an e-invoice for every single transaction right away. Instead, you'll just issue 2 main documents. First, a consolidated e-invoice. This combines multiple sales to the general public into one report. And second, a consolidated self-billed e-invoice. This summarizes things like payments for foreign services, payments to individuals who aren't running a business, or goods you imported from overseas. And yes, there are specific due dates for these, all set out in LHDN's E-Invoice General FAQ. Okay, let's talk about the deadlines during the 6-month interim relaxation period. First, for consolidated e-invoices, you've got to send them within 7 days after the end of the month. For example, sales in January, submit by 7 February. For consolidated self-billed e-invoices, there are 3 different timelines. 1. Payment to individuals who are not in business. That's due by the end of the month plus 7 days. So payment in January, submit by 7 February. 2. Use of foreign services. This one's due by the end of the following month plus 7 days. So payment in January, submit by 7 March. And 3. Import of goods. That's due by the end of the next following month plus 7 days. For example, import in January, submit by 7 April. Now, let's walk through the schedule for each phase, so you know exactly when your official implementation date is and when your 6-month interim relaxation period will run. Phase 1. If your turnover is above RM 100 million, your e-invoice implementation starts on 1st August 2024, and your interim relaxation period runs from 1st August 2024 to 31st January 2025. Phase 2. For turnover between RM 25 million and RM 100 million, you start on 1st January 2025 with interim relaxation from 1st January 2025 to 30th June 2025. Phase 3. If your turnover is between RM 5 million and RM 25 million, your start date is 1st July 2025 and your interim relaxation runs from 1st July 2025 to 31st December 2025. Phase 4. For turnover between RM 1 million and RM 5 million, you begin on 1st January 2026 with interim relaxation from 1st January 2026 to 30th June 2026. Phase 5. And finally, if your turnover is up to RM 1 million, you start on 1st July 2026 with interim relaxation from 1st July 2026 to 31st December 2026. For example, let's say your company is in Phase 5 and your start date is 1st July 2026. From July to December 2026, you can issue 1 consolidated e-invoice and consolidated self-billed e-invoice per month instead of issuing for every single sale, but you still need to keep proper transaction records. What is the key difference between a normal e-invoice and a consolidated e-invoice? For a normal e-invoice, you must include the specific buyer's details, such as their full name, NRIC or TIN number, and all the required information for each individual transaction. In contrast, a consolidated e-invoice is much simpler. It uses a general TIN and a general customer name, such as General Public, and you just need to summarize as multiple transactions into a single monthly invoices during this period, so you can stay compliant without the stress. So remember, interim relaxation gives you breathing space, but it's not a free pass to skip compliance. Keep accurate records, issue your consolidated e-invoice monthly, and be ready for full e-invoice implementation once your relaxation period ends. If you found this helpful, give this video a like, subscribe to my channel, and stay tuned for more simple tax tips. Thanks for watching. CLPC Advisor, your trusted tax consultant.